Thank you, Jojo. Good afternoon, all. So after this interesting part on legal parts, I will now go into the details of the financial part. Jojo, can you go to, yeah, please. There are three sections to this presentation. First of all, a kind of recapitulation of what was said previously on the grant agreements, the eligibility criteria, because one of the questions was asked about this morning, so I will come back to this, giving the focus on the lump sum scheme as well. And also to be mentioned that in the system, we have also provided to the letter of the call 2 annexes to be completed. The first one is the lump sum detailed financial Excel table that I will explain in detail and show you how it works. And finally, also only for the members, the estimated members' contribution, because as said previously by Carlo, by Jojo, according to the Single Basic Act and the regulation, the members have to provide additional and complementary contributions. Next slide, please. So first, let's start with the grant agreement. Just in summary, what was said before, we need a grant agreement to define your rights, your obligations, and also the amount of money that you will get from the moment the technical part and the technical objective is reached. So your right is to receive funding, to owe the results, and eventually to ask some amendments. So this part I will explain after. Your obligation, of course, to implement the projects, submit the reports, and the money you can get. Here, indeed, as we are launching a call under the scheme of lump sum, I will explain in details in the coming slides how the system works. Next slide, please. So overall, the structure of the original rough grant agreement is composed by a data sheet and some articles. So you would have in your grant agreement general data, participants, grants, reporting payments, recoveries, consequences for non-compliance, and specific rules and specific annexes. Here we will focus on the parts about finance. Next, please, Jojo. Okay, so what we are implementing now is we're talking about lump sum. So the main difference with standard grant agreement is that lump sum gives the focus on work package and it works. So we focus on the importance of the work package and the delivery. And one of the basic principles is for the payment scheme, we have some tasks associated to some work for a beneficiary A, another task for beneficiary B, and lastly, the third beneficiary with some task associated to the same work package. The principle is that the lump sum share corresponding to the lump package is paid to you as from the moment the work package is complete. And then one of the consequences of the lump sum scheme is that if one of the tasks is not finalized, the work package is not considered complete and then there is no payment. We have some practice about that since we have implemented lump sum grant agreements for the last 4 years now almost. And the system works quite well, and indeed it is focusing on the technical results. Next slide, please, Giorgio. Thank you. So the grant agreement will therefore set up lump sum share. So that means that for each work package per beneficiary, we have a maximum contribution that we call co-funding or GU contribution, corresponding to the full accomplishment of the work committed as per Annex 1. So the lump sum for the grants is set out at its signature based on your proposal, and during the preparatory phase, the evaluation of the experts and the GU about the consistency of your proposal, and then we define the lump sum share per work package for all the grant agreements. The co-funding is therefore the amount you will get upon completion of task. What is interesting in this scheme is that we have no reporting of actual cost anymore. So this morning, I don't know if you are still here, Mr. Petruccioli, Piero, You asked the question how the GU would manage this part. I will explain that in the next slide. But indeed, there is no more reporting on actual costs. And there is also, quite important, no ex post audit or interim and financial audit. So this is over. Next slide, please. Okay, so for the lump sum grants, when the amount of the lump sum is not fixed in advance, this is the scheme we have. So according to the decision of implementing lump sum through Horizon Europe, we have two methods. We are implementing the second method, meaning that the amount is not fixed in advance. We have an estimated amount per flagship area, but the estimated budget must be described in a detailed budget table. So you will need to provide some elements on how you have calculated the lump sum share for each work package. This will be used as a basis for fixing the lump sum amount at grant agreement level. And the decision I was referring before says that the detailed cost estimation per work package and per beneficiary and affiliated entities, if any, should include only costs that would be considered eligible in an actual cost grant. This is important now. Where relevant applicants should declare that they have followed their own accounting practice for the preparation of the estimated budget. So what does it mean? That means that when you have to build your proposal and establish the amount of money that you are budgeting for the activities associated to the grant agreement, you will need to prepare an estimated list of costs, which is taking into consideration the principle of how the cost would be eligible under standard Horizon Europe grant agreements. This has to be taken into consideration. When the costs are summed up, then we have a total amount per beneficiaries, affiliate entities, and per work package. And then we will evaluate ex ante, before the grant start, before the implementation, whether or not the cost has been properly budgeted, estimated, and therefore we would confirm the amount of lump sum. Next slide, please. So as the lump sum is an approximation of the costs actually incurred, the cost that you would include in the detailed budget table that I will present afterwards, as general principle, first of all, when you are preparing, must comply with the basic eligibility conditions for EU actual cost grants. So at the definition, at the preparation phase, you need to consider the Horizon Europe eligibility criteria. What kind of subcontracting, for instance, I should use? As mentioned by Valerie earlier, there are some basic conditions to integrate the subcontractors, some rules, you cannot do whatever you want. So you need to take that into consideration when you build the budget of your proposal. So for the purchase and subcontracting, as I was mentioning, when you consider having recourse to a subcontractor, you must ensure the best value for money. So if appropriate, at the lowest price, the conditions, and so on, and to be free of any conflict of interest. And once you are internally preparing this and consider that the subcontracting you would like to use answer these conditions, then it could be included in the proposal and in preparation budget table. So at the ex ante stage, when we are assessing your proposal, if the budget table contains ineligible cost, then in that case, the grant may be reduced. So that means that we will sign eventually the grant at a lower value that was proposed. Next, please. So the subcontracting, so we have prepared a slide dedicated to that because we know it's an interesting and important topic. So the principle of subcontracting, as I said before, ensuring the best value for money, no conflict of interest, and subcontracting of only a limited part of the action. This is to answer as well the question of the percentage that was asked before, and Valerie already answered correctly, of course. So it's limited part of the action. But are not considered to be additional cost eligibility conditions. So consequence, in case of breach, GU may reduce the grant in proportion of the seriousness of the breach instead of rejecting costs like this. So the estimated cost for each subcontract do not have to be included in the Annex 1, okay? You will prepare that in your financial document, and you will have the overall cost of subcontracting that you consider implementing. And the total estimated cost of subcontracting per beneficiary are not displayed in the Annex 2, so the Annex 2 of the budget. So you have yourself this liberty to establish the total amount, and it's not necessary to have the detailed list of it. So nevertheless, cost of subcontracting must be indicated in the financial Excel table that I was making reference before, and which are part of the lump sum. So this I will show you how it works. Next slide, please. So once you have established your list of costs for the calculation of your participation to the project, the per work package, what we call the lump sum share, and once the grant is signed, this is where we enter in the quite advantageous implementation of a grant agreement under the scheme of lump sum. Why? Because from the moment the grant agreement is signed, the lump sum project's funding removes all obligations on actual cost reporting that are in place and in force in a standard grant agreement, and remove the obligation of financial audits. So some of you may know that under standard grant agreements, you have to provide in final payments above a certain amount a certificate of financial statement, and you may also be hit for ex post financial audit. So at project implementation phase, all this is over, and it is considered as a major reduction of administrative burden, having implemented quite a lot actually of lump sum grant agreements at the Shift to Rate program. It was confirmed and the simplification was appreciated. So the focus is on the performance. We shift from focus on financial management, reporting, financial declaration, and so on, to focus on technical content of the project. So one lump sum share is fixed in the grant agreement for each package, for each of you, and this amount is paid when the activities associated to the work package are completed. So we have reporting periods. For each reporting period, there is a definition of the number of work packages that have been completed, and automatically, without financial reporting, automatically the amount will be integrated in the payment process, subject to the validation by the GU of the technical content, and therefore with the team of Giorgio. Next slide, please. So now I will therefore answer to the question that Piero asked this morning, saying, okay, if we do not need to keep trace of actual expenses, that was his question, what process will be used by the GU to assess the adequacy of costs and therefore of the Europe's rail contribution? So in summary, you prepare the budgets of the proposal, taking into consideration that all the costs that you are introducing in the grant agreement should be considered eligible ex ante as Horizon Europe eligibility criteria. The GU, together and supported by the experts, will assess again at proposal stage the consistency of your proposal and of the allocation of work and the costs that you have introduced. I will enter more into the details after. So this will define the lump sum grant amount value. We sign the grant agreement with you, and at implementation phase, we don't need to keep records. We don't need actual cost reporting anymore. We need to receive the technical documents of the work. We need to ensure that we have the publication, prototypes, deliverables. We need to know who did what in the technical report. We may need any document providing that the work was done as detailed in the Annex 1. So we focus on the technical part and the results. We don't need any more timesheets, pay slips, contracts, depreciation policies, travel invoices, actual costs. So how the GU would assess that? Ex ante, at proposal phase with the support of experts and the evaluation of the GU. Thank you. So next slide, yeah. Okay. Even though it is not considered necessary anymore once the project is implemented, is in the implementation phase, as I said, you need to consider some of the specific provision of the Horizon Europe eligibility criteria when you establish your budgets. And for your information, I'm sharing with you now some of the slides, giving you some ideas on how the system works under Horizon Europe. We will also share with you the annotated model grant agreements, in which you would find the description of all these elements together. So we're starting with personal cost to explain you a little bit how it works and what you can take into consideration when you have to determine and define the calculation of your personal cost. So next slide, please. For the calculation, you can consider what was put in place and simplified under Horizon Europe. Before we had several methodology, quite complicated here. The intention is to say, okay, let's make it simple. We define the daily rate. We calculate the number of days worked. It's considered to be 215 per year. And then you would have a combination of acceptable procedures to comply with Horizon Europe eligibility criteria, and at the same time with your own accounting practice to calculate what would be the rate you can ask in your proposal. Next slide, please. So also, the approach, you don't need to care anymore about what was the last valid calendar year and so on. Now you can also calculate your personal amounts, well, the amount of salary and so on per calendar year. So you make your estimation year after year, you know how many years you would be involved in the project, and then you can calculate accordingly. So giving the focus, but again, this is for ex ante. You can consider the calendar year for the definition of the cost and also anticipate a bit inflation. Next slide, please. So again, because this is not what will matter at implementation phase, but when you define your proposal budgets, you can apply these simple formulas that are available in the grant agreement and its annotation as support to see what would match as well with your own internal procedure and accounting principles. So the intention under Horizon Europe was the discontinuation of the different formulas, complexity, and so on. So that's simplification also for the beneficiaries. There is no more last closed financial year where it was quite complicated because you could have closed your financial year in June, in January, and so on. And instead to use a single corporate daily rate and calendar year approach. Next slide, please. Also, interesting for you to know, just because I know that some will be interested by the equipment costs, and we already have received such questions. Next slide, please, Giorgio. The overall concept of equipment costs is the respect of the depreciation, because by default, what is considered eligible is the depreciation cost of your equipment for the duration of the project. There are some exceptions, okay? You can, for instance, consider the full construction cost, typically the cost of personnel involved in the construction of the prototype, or the full purchase cost, the component pieces of equipment, both for the prototype, but the equipment itself, usually the principal is the depreciation. And again, in the grant agreement annotation, you would see what can be considered acceptable for being considered as cost of equipment, and you build your proposal based on these elements. Next slide, please. Indirect costs, this doesn't change. It is automatically captured. Next, please, Giorgio. Automatically in the financial table is that you get a flat rate of 25%. So in the next section, when I will present the detailed financial Excel file, you will see that there is a section for indirect cost, 25% of the different cost categories. it's embedded immediately in the system. Next. Okay, so coming back again to the question of this morning and how we will do the assessments. We have had this slide just to complement a little bit the points that was raised earlier and explained earlier by Carlo Giorgio and also Valerie about the evaluation. Next, please. You know now that in the evaluation process, there are the evaluation criteria of excellence, impact, quality, and efficiency of the implementation. Okay, so this is what will be done. However, coming from the decision of implementing grant agreement under lump sum scheme, there are some additional conditions that would be verified for each work package of your proposal by experts. Under lump sum scheme, those additional checks are: check that the budget table, okay, are evaluated as well when we make when the expert will make the assessment of your proposal, that are compared with relevant statistical data, historical data on previously funded and comparable actions, or based on relevant benchmark on cost and resources, such as market price. So, or would we have the guarantee assurance that the proposal you're submitting includes costs that are relevant for the need of the work package and the actions and so on? We will take some statistical data and make the comparison with what you have proposed. So the expert will assess this part, they will make the comparison, and in case they consider it's acceptable, then it will be simply confirmed. And in case they consider that the cost that you have presented may be eventually overestimated or may be inaccurate or for whatever reason, we may come back to you at gap phase for asking additional clarification, asking additional support and acknowledgement from you, and either after that still confirm that the budget proposed is valid and will be signed accordingly, or sometimes, depending on the answer provided, we could eventually reduce a little bit the lump sum share accordingly. So all this process would give us the assurance that ex ante the proposal is the best and the best estimated proposal that would answer the needs and achieve the objectives behind. Another point that the expert will verify is assess whether the resource proposed and the split of lump sum shares allows achieving the activities and expected output. And also verify that the proposal includes the declaration by beneficiaries of having used their own accounting practices. Actually, I said that to you before, you also need to take into consideration that you are respecting your own accounting practice in the process. And this is also part of the significant simplification of the process, is that ensuring that for you the preparation makes more sense. And then there is a flag, a declaration to do at proposal stage. So these are the specificities of the lump sum share with respect to the financial assessments. And this is what will be done ex ante to verify and confirm with you the lump sum share per work package per beneficiary, which would be signed. And at implementation phase, all the costs, the actual cost verification, all the financial reporting are over. So we have a little bit of work, you now to define your proposal, but as a normal grant agreement. We would have with the experts some verification to be done once the call is over for the evaluation process and so on. And as soon the grant agreement is signed, all this is finalized. Next slide, please. Ex post control, I will make a quick comment. Next, please, Giorgio. Because it is an advantage, there are no more financial ex post audits anymore. There are no more financial audits anymore, actually. So this is a big advantage. The only thing that may happen ex post, so sometimes the European Commission launch ex post audits on grant agreement to ensure that all the rules have been followed, the principle followed, and the cost eligible. Under lump sum, we may launch ex post controls to verify the proper implementation of the action and the compliance with the other obligation of the grants, IPR, obligation to third parties, other obligation, and so on. So again, the focus is on the technical achievement. So we will develop some guidance and explaining to you after what kind and at what condition ex post control could be launched. Next, please. And then finally, next, a quick word about amendments. This could be important for you to know for long term, because once the lump sum is fixed, we cannot have transfer of budget among beneficiaries anymore. There is no need to have this kind of flexibility anymore because at completion of work package, the lump sum share is automatically paid. So you cannot declare less or more cost in the end. However, during implementation phase, if you consider that there is a need to make some adjustments in agreement with the consortium and so on, you could propose a revision of the lump sum share via request for amendments at the condition that it doesn't breach the award decision, of course. And the change will enter in force after the approval of the amendment, so for the next reporting period. So, of course, you cannot change anymore completed or paid work package. It's over, it's already paid. And we can accept only in the exceptional circumstances. So if duly justified and after a project review. So we systematically have a review for each amendment. And then also one point that is important, it may happen at the final reporting period only that we may pay partial payments. So never during the implementation phase of interim payments, but at the end, depending on the result achieved and so on, we may have a partial payment. Next slide, please. Okay. So this is for the general concept of a lump sum approach. I don't know if there are a lot of questions on the slide. No, there are not so many questions now. So I suggest to continue as planned in the agenda in that case. And that's, I will cover the questions after. Okay, so in the package of the proposal, there are two templates, as I say, two templates to be filled in. The first one is the financial Excel table, which is required for all. And then there is a last template that I will explain after, only applicable to the members of the program. So the financial Excel table contains multiple tabs, allowing to clarify how many beneficiaries we will have, if there are affiliate entities, what are the funding rates, the different cost categories, and so on. So on first tab, read please all the description, all the details of each tab. Everything is mentioned there, okay? So on the first tab, you have this kind of screen description of everything that you need to do to fill in properly the financial Excel table. Next, please. So first tab, it's an important one. It's dependent on the consortium and so on. So you have the list of beneficiaries and affiliate entities. So the Excel file works with macro. So you can add, clicking on the button, as many beneficiaries that you want and as many affiliate entities to a beneficiary as you want. And once you have filled in this for your consortium, you click on Apply Changes. And automatically, when you click on Apply Changes, it will create as many tabs per beneficiary as you have mentioned here. So after, of course, you can continue and adding new beneficiaries and so on. The point that was discussed previously about the funding rate is here again, and it's quite important. It says that, as mentioned by Carlo before, repeated by Giorgio, and in accordance with Article 34 of Horizon Europe, we keep the approach that we need to have overall a funding rate of 60%. Okay, so this funding rate of 60% ensures that we comply with the SBA objective, and that also means that we also intend to comply with the rules applicable on the funding rate for Horizon Europe, meaning that, for instance, I'm reading the text of the Article 34. a single funding rate per action should apply for all activities. So that's the case for us, 60%. It's fixed in the program. And you can also implement for innovation action up to 70% of the total eligible cost that could be reimbursed, except for non-profit legal entities where up to 100% of total eligible cost may be reimbursed. And this is the reason why we have here shown you an example where entities that are non-profit may ask 100%, some other 70% in accordance with others in Europe principles, another one 60%, and of course, at the moment, someone may have a lower funding rate to ensure that at proposal level, we don't exceed the 60%. So this is how you have to build the approach. Once it is defined per beneficiary, you go to the next tab. So next slide, please, Jojo. And this is where you start building the project with the identification of the work packages. So here it's quite straightforward. You give a name, a description, and once it's over, you apply changes. And keep in mind that you will always be paid at the end of the reporting period based on the number of work package completed. So you should also build your proposal, ensuring that after each reporting period, you receive the amount of money corresponding to the activities delivered. Next, please. Okay, so once you have filled in the number of beneficiaries and affiliate entities, you have established your project with the number of packages, and then there are different tabs, depending on the number of beneficiaries you have created, one per beneficiary and its affiliate entities with a detailed list of costs corresponding to the cost I mentioned previously that should be considered eligible under Horizon Europe. So the first part on work package is valid for the work package 1. Then you would have the same part for the work package 2, and so on and so forth, depending on the number of work package you have defined. For each work package, you will have to define your personal cost, senior, junior, orders to be explained, and then you have all the cost categories with purchase of cost. You have the equipment, you have the infrastructures, you have other goods, you have subcontracting, and so on and so forth, and you fill that in. So all the yellow fields can be filled in. And you do the same for the affiliate entities per work package. And at the end of the sheet, you can find a summary with the information concerning all work package and all the costs foreseen for each beneficiary of affiliate entities. Next, please. For equipment, because, well, someone may be interested that you can also use a tool in the financial Excel file. There is a tab dedicated to the calculation of the depreciation, the cost you can consider for the project. The system will help you with the percentage of use of the equipment in the project, the investments, and so on. And then automatically you may have an idea on what cost could be inserted into your specific data sheet. Next, please. Finally, the summary. Okay. You have a summary for all the projects and for you. And next. So this is still in the same sheet. You have another tab in Excel that will also provide you with a summary of resources, person months per beneficiary per work package indicatively so that you can cross-check and complete. Yes, next. And finally, you have the budget associated to your project after reduction of the funding rate. So that's important. And the totals that you see would become the lump sum share per beneficiary for the grant agreement. So the amount of co-funding you would receive in total after all work packages have been completed and at the end of the project. So this is something which is quite important that will be submitted in the proposal and that we will evaluate together with the other information of the Annex 1. Next, please. And then when you are in the portal itself, because the financial Excel file is not embedded yet into the declaration, so you should understand that up to last year, the lump sum was still in pilot phase at European Commission level and for EU bodies. So now they are starting further developing the IT tool, and in the coming months, in principle, maybe for the next call, I don't know, we may have this financial Excel table immediately available into the system, so that for the moment it remains an ad hoc document that you need to submit to the GU. However, in the summary part of the proposal, there is a lump sum breakdown into the budget proposal table in the system that you have to fill in manually. And if you compare the two slides, where you see here requested grant amount, it considers to what you have in your financial Excel table, the total amount of the grant agreement per beneficiary. So you compare, you take the amount of the financial Excel table and you put it into the system, and we will judge you, and the expert will verify and cross-check that it is consistent. For the members only, for the members of the program, there are dedicated column for the ICOP and for the IK. So the ICOP should be introduced in the budget proposal. So if a member has marked in the financial Excel table that the funding rate was 60%, automatically you will know that the ICOP will be 40%. If a member has identified that the funding rate was 50%, then the ICOP will be 50%. And if a member has established that it was 100%, then there is no ICOP. And then there is the IK that should be considered at member level afterwards. Okay? So this is for the financial Excel table. And then what will be the impact for you at proposal stage when you need to enter into the system the figures, and the supporting documents will be allowing us to verify and cross-check. Thank you, Jojo. Next slide.
Just for the avoidance of the doubt, because I just noted, in this is just an example from the financial point of view. Such proposal will not be eligible because you can see that all countries come from Belgium. Just coming back to a question that was.
Yeah, maybe you're right that the slide we prepared is not really representative in terms of country. Yes, indeed. Yeah. Okay, and then here it's a part for the members only. It's only a few slides just to give you the context and giving more explanation about the ICOP and the AK. And then after we go to the question to all. So it's a specific provision to be considered by EURail private members intending to join a consortia for the submission of a proposal. So next slide, please. High level, the contribution from members other than the Union and contributing partners as per Article 11 of the Single Basic Act, their private members should consist, well, contribution should consist of ICOP, IK, and financial contribution. Carlo already made reference to that this morning. 600 million provided by the Commission, 600 million provided on top by the members, and this is what we call this leverage effect expected. And therefore, the ICOP and IK together would allow us to assess whether or not we have reached the expected leverage effect. To give you an idea, we consider the project as a total project cost for all, including the members. There is a funding rate that the GU will pay, and this is the 60% that we have already mentioned several times since the beginning. So this is the part which is funded by the GU. Then we have the Horizon Europe eligible costs of the project, and all the rest would therefore be considered for the members as ICOP. And this is a part of the contribution they will do to the program according to the Single Basic Act. And finally, if we want to reach the objective of the SBA, the members also need to contribute on top IK. And it is, if applicable, linked to the project or activities according to the own accounting practice only. We are not referring now to eligible cost because it's not part of the financial Excel table. So we have signed letter of commitments and final contribution with all the members. Final contribution per members are agreed with the expected leverage effects. Everything has been calculated at program level, which leads us to the next slide, please. which led to the fact that we have calculated that the leverage effect, it was also mentioned by Carlo, should be 1.263 times the funding request. So a total of contribution at program level should reach in total 2.263. So this is what we need to reach altogether. The non-beneficiary, non-members, the members, and the GU. So for the members, any discrepancy in this leverage effect should be well and duly justified. So we have some parts. And then again, if we have €1 of contribution, in the end, we should reach 2.263 euros. This was calculated previously. Next slide. So how do we manage? There is, and that's the other template table that I was making reference before. You will have an annex to fill in. You introduce the project acronym. Then you fill in the members' names. Really important here, we're talking about members aggregated, members and affiliate entities. So all together, we don't need a split. The split we already have in the proposal budget table. And the idea here, of course, if we respect again this the same threshold, if you enter that you participate to 100 in the grant agreement, if you fill in the column B, so this is a copy paste again of the proposal, the lump sum share, automatically the system would propose what is the target for you to reach in terms of contribution. So C, the contribution is ICOP, IK, all members the member together, the member, the affiliate entities, and so on. So if one affiliate entities contribute at 100%, there may be an agreement with the other members or the affiliate entities that they may participate in IK, for instance. And in case you are changing the value of column C higher, no problem. Lower, then you need to provide justification as applicable. Okay, I will stop there for the specific part of the members. So basically, we have discussed already about overall all the principle and approach for the lump sum, the financial Excel table. And now we will go to the questions in the chats. Let me have a look.
Yeah.
Well, first of all,
I can, if you want, Vincent, I can guide you quickly.
Okay.
So we had a few questions that I think you already replied during your presentation. So one question was related to well, no, actually, one question not replied was the one about the pre-financing. Maybe you did, but the question is there any pre-financing?
Yeah. So like for all the Horizon Europe grant agreements, we have a pre-financing, and the pre-financing is expected to be 40% of the call value. And depending on the situation and depending on the achievement reach and so on, we may consider releasing a second pre-financing, but it is something that will be discussed further after the grant agreement preparation phase and signature of the grant agreements. But yes, 40% of pre-financing is planned for the moment.
Another question was about the partial payout of work packages. You briefly mentioned that at the end of the project, we can do partial payment. Maybe you want to further explain it.
Well, in principle, there is no partial payment of work package. That's as simple as that. So that means you have calculated the budget of the proposal. The expert, the GU, confirmed it. We signed a grant agreement. It is therefore expected that at each reporting period and upon completion of work package and validation of the joint undertaking, you will receive the corresponding lump sum share for each work packages. So no partial payment are expected. What could happen, as I said, in case you notice some kind of deviation and so on, or significant deviation, then you could eventually check for an amendment of the budget, intending to increase your lump sum share in some occasion and decrease someone else's share, if it's possible or not. But finally, because the GO will constantly monitor the technical achievement and technical results, we have specific issue reviews performed by Giorgio and his team. We will see at the end of the project how the project has been achieved and so on, and if there are some reason for a possible reduction of final work package. It could be upon common agreements, depending on nature and so on. We also have had some cases where in shift rate program, some have overestimated work packages and have a request amendment for work package share to be reduced, or for other reasons. Hopefully, for the moment, we have never had experience of a reduction of grant agreements due to the fact that a project was not properly implemented. So we never had this situation, and I hope it will continue working like that. But I hope I have answered your question. So
yeah, and this is a link actually to another point that was brought up about the fact that there is a significant risk that because of the broadness of the activities that our package may fail, in the sense that results may not reach the expected outcome. But this is not so if it doesn't reach the expected outcome because it's supported by the fact that research generated these, is not a reason for not paying the work package.
yeah, exactly.
So then the next, there was another question about the unit to be used for personal cost, if it's still the case as in ship to rail of person month.
No, but that's in this part we enter in your own accounting practice. So the interest of lump sum is that first I presented you the much well, if you are aware of how it was for Horizon 2020, how the process are in place for the calculation of personal cost, so with a daily rate and so on. You take into consideration this methodology, you implement it with your own accounting practice, and you calculate the person months in the financial Excel table accordingly. So we do not enter into this kind of consideration, unit cost, what details, what calculation. We will share with you the grant agreement, annotated grant agreements. You will have all this information there, and you build your project like that. But keep in mind that your own accounting practice is also an important element for this.
So the next question is about if in the financial Excel table, the information that needs to be put in is just the funding or the funding plus the ICOP.
Sorry, repeat it, please, Jojo.
So if in the financial Excel table, the figures that needs to be insert, it's about the funding or also the funding and the ICOP per project, per partner, per work package.
Yeah. So it's the total eligible cost for the action. So is the 100% of the cost, and the system will automatically calculate the co-funding and the ICOP depending on the funding rate that you have established manually into the tab beneficiary.
Exactly. So then there is a question about the ex post audit. So there is no more ex post audit, no more CFS. But the question is there will still be a yearly ICOP and ICA audit?
This is this is an important question for the members, not for the beneficiaries, who are not member to the program. This is something that we'll clarify in the coming months. We will update the guidance about it. For the moment, we keep the same approach that was announced to the member last year. We would keep the certification applicable for the IK because it's not part of the eligible cost of the actions. And we should not consider, in principle, the certification of the ICOP. Okay. However, we would have to put some kind of balance to ensure that we achieve the objective and so on. We have some proposal in mind, but for the moment, we confirm that the approach that was discussed some times ago, we consider the annual certification of IK. In the Single Basic Act, the timeline is changed, so it would have to be delivered by May instead of end of April now. So again, Horizon Europe goes into more simplification for the members as well, with the certification of IK only. So we are expecting to make a presentation, well, to update the guidance document to the members in the coming months, and you will be informed about it.
Okay, so another question is about if it's possible to shift funding between work stream. So to have higher than 60% in the different work stream of the same project. Well, in a lump sum approach is a bit a strange question, maybe.
I think so, yeah, because the funding rate applies for all the projects, for all the work package and so on. So we don't enter into multiple funding rate for multiple beneficiaries. Well, no, this is way too complicated.
Okay, the next question is about the ICA activities that needs to be approved by the governing board, and if there will be a template for these, and then which ex post evidence needs to be presented for the ICA. I think you already replied, and
Yep.
if the ICA can start as soon as the proposal is submitted, June 2022.
So yes, there is a plan for IK. We will collect and so following, the annex that I have presented you with the contribution, members' contribution, combining ICOP and IK. So after the proposal are confirmed, we will have to come back to you. There is a template of IK activities provided by European Commission, which is available in our annual work plan. We will fill in this table with you, having the governing board confirming the validity of the IK that it was accepted. And for the validity of IK, from what moment it is,
Yes.
I don't remember the email exchange.
I can
It's since
answer yes.
you
So
found it? Yeah.
The answer is yes. As soon as the proposal is submitted, it is possible to have it eligible accordingly to the request for a fixed start date that can happen from the moment where you submit your project proposal. And this was also written in our topic conditions, so the two goes together.
And then finally for ex post, so we will have, of course, thank you, Jojo. We will have verification of the implementation through the annual certification process. And yes, in principle as well, we may have the options as due to conduct kind of further verification on the declared cost of IK and ICOP. According to the Single Basic Act, we may do this.
The next question is how can an organization reimburse the overhead expenses and other administrative expenses? Is it covered with the 25 flat rate?
Yes, in principle, yes.
Okay, so in Horizon Europe, the SMI can have a SMI, so I'm short now of acronyms, can have 100% funding. So who can have 100% funding are the non-profit entities, and it is the same indeed here, as Vincent explained before. I'm not sure of the acronym SMI, what it means.
I guess it should have been SME.
SME can be for profit most of the time, so they could not have 100% funding, but they could claim up to 70% funding because it's an innovation action of the eligible cost. As we heard from Valérie, associated partners do work, but they cannot declare cost. Does they refer to the eligible cost? If so, cost generated by an associated partner can then be declared as ICA. Vincent, you wanted a reply or?
I'm just trying to figure out where the question is because this one is.
Okay, maybe I can reply.
Yeah, okay, it's okay. Are we associated partners do work? Yeah, this one we will provide an answer after.
Yeah. Okay. And in any case, ICA, it's only linked with the membership.
Yeah, exactly.
Considering ECOP as eligible cost, does it mean that here also 25% flat rate for overhead cost?
So the 25% is calculated on the 100% cost. Okay, and then after the 25% are applied, then there is a split between the funding rate, the co-funding, and the ICOP. So yes.
Okay. Yes, and thank you also. I just noticed now that you explained what SMI was, perfect small medium industry. But
Okay.
again, as I explained before, if you are for profit, the 100% is not applicable. It's for non-profit. I think we reached the end of the questions. I don't know if there are further questions you want to put in the system. Yes, one more. No. Yes, about the lump sum, will it take place at the end of the project? So the payment, I guess. Lump sum.
I guess, yeah. So here I can quickly make reference. So the lump sum is associated to the work package. The lump sum share is automatically released from the moment the work package is completed and the GU validates and confirms the technical achievement reached for each work package. And therefore, when you build your proposal, you should also take into consideration this element to establish how many work packages you would have and when they are completed, in order you can make a kind of repartition of the reimbursement of the project all along the project duration.